Hey everybody, how you doing? All right, let's talk. Let's talk about the markets. Well, we're seeing a little bit of a corrective price action in the stock market. Yesterday the Dow was down 270. Today, right now, as of this recording, it's down 270. It was down over 300, so came back a little bit, but it's still early in the day. So we'll see how that plays out. There's no doubt that the market is ripe for a correction. What the catalyst for that will be, who knows? Could be anything. But the market is definitely ripe for a correction. Catalyst actually could be rising bond yields. You saw yesterday the 10-year yield go up to a 4-year high at 272. Pulled back a little bit today. Let's talk about bond yields. Of course, that has been a big call of mine. I made that call going back to December 2015 when the Fed reversed course on monetary policy and started raising interest rates. I said at the time, and even leading up to that, I said that the dollar was going to fall, gold was going to rise, inflation was going to pick up, and treasuries were a sale. Having been long the treasury market for 9 years prior, when the Fed was reducing rates and engaging in quantitative. A lot of people were very bearish on treasuries. They were saying it was going to be hyperinflation and the dollar was going to crash. Of course, I knew that the opposite would happen because all of those extraordinary monetary measures were really deflationary. They were a net removal of income from the economy. And now the reverse is happening. So we had that call. I have a lot of subscribers now. We're very happy. I've been helping them just stay focused and to remain patient, telling them that this was going to happen. And it is happening. All right. So that could be the catalyst for the stock market correction, bond yields rising. And I see a lot more commentary out there online. People picking up on the rise in yields. Not many people, I would say, really nobody correctly understanding the reason for it. I see all kinds of ridiculous commentary about it's the debt. The debt is finally catching up to us, or China's not buying anymore. Like all that stuff is nonsense. All that stuff is ridiculous. Yields are rising because the central bank is raising the rates. They're the monopolists. They set the rate. And I've been all through this over the last few days. Every single day I've been talking about this. But the vast majority, the 100%, and I use the term the 100% because we are in a tiny, tiny minority who understand this. Really, it's only me and my people. So the 100% believe it's something else. It's China or somebody's not buying, or the debt. Oh my God, the debt is finally causing the rates to go up. How are we ever going to pay the debt? All that nonsense, okay? By the way, people have been sending me now today, as a matter of fact, I've been getting a number of people sending me articles or research pieces that talk about, hey, remember that whole big deal about corporate profit repatriation, and they're bringing back all these dollars from overseas. They're bringing them back. Well, that was never really going to happen because, why? All those dollars were here to begin with. Gee, who said that so long ago? Last year, as a matter of fact, when this whole topic of corporate profit repatriation came up and there was this, suddenly everybody was saying there's going to be this huge, gigantic dollar rally because they're bringing the dollars back. I said, nuh-uh, it's not happening. All dollars in existence, whether they be in the form of reserve deposits or treasuries, can only exist in one place, and that was on the books of the Fed. They're all right here. So now some people are starting to wake up to that, and I see the articles that are being sent to me. Somebody sent me a research piece from Credit Suisse, I believe. So I had that way before everybody else, as I do with everything, pretty much. Okay. Oil. Let me talk about oil. Oh, by the way, on that repatriation, what has changed is the tax treatment, of course. That previously untaxed profits, okay, are now going to be taxed, and there may be some significant consequences from that which might surprise you. And if you want to know what those consequences might be, because I just sent out an email on that topic to my subscribers, then go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader, and I will send you the email. By the way, I don't only write that weekly report, MMT Trader, if you are a subscriber. And by the way, that report contains a wealth of information, all kinds of stuff, stock recommendations, Forex, everything. I send out emails all day long on the state of the markets, on stock recommendations, etc. So you really need to get that. Let's talk about oil. Of course, we were long the oil market going back all the way to $46. We rolled that up. Last week I said take profits at $64.80. We caught that whole entire move. I said, if you were paying attention last week in a video after the Wednesday's EIA Weekly Petroleum Status Report, I said that was the first time in many, many weeks, many months, because I follow that report every week, and at 10:30 a.m. Eastern Time, every Wednesday when it is released, I'm Johnny on the spot. I send out a breakdown and analysis of that report to my subscribers, and every week when the zombies were reflexively just looking at one number, maybe the change in crude inventories and selling, I kept saying, you got to buy, you got to buy, you got to buy. We wrote it up, 46, 47, 48, 50, 52, 55, 57, 59, 60. I kept saying, you got to buy, 62, 64. Then last week's report came out, and for the first time in a long time, I said, you know what? There are things in that report that look a little soft to me fundamentally. I said, take profits. We were holding a position in Valero, VLO, which we got into at $66 a share. We sold it out last week just below the highs, just below $99 a share, $98.70. Okay, it's down to 95 something, I think, the last I checked. All right, caught the whole entire move in Valero. So, and we short, some of my subscribers shorted crude above 65 on my recommendation to get out and take profits. Okay, great move, great move. So what does the oil market look like now? We'll have to see. All right, could be just a brief correction, or it could be something more significant. But again, you got to get the report, MMT Trader. Go to pitbulleconomics.com and sign up for a 30-day free trial of MMT Trader. No obligation. You get it free for 30 days. You can cancel, but you get the emails and you get the report. All right? And you want to get that email today about the possible impact of this corporate profit repatriation. Of course, that's a bad term, because repatriation would be like bringing back. That actually means bringing back, and that's what's happening. All right, folks. See everybody later. Bye-bye.